Well, morning, Jeff. Happy New Year to you and the team. You've kicked me off with an enormous question, and it's the most important question. So, the first point I would make is that while nominal yields have risen slightly, they've risen slightly from obviously an extraordinarily low level, and they've also risen at a time when inflation expectations are also rising. So while I'm not absolutely current on this, 2 or 3 days ago, real yields, real long-term interest rates in the US were more or less at their all-time lows of about 1.5% or something. And I doubt they've changed that much during the course of this week. So I suppose the first point I'd make is, while it's perfectly logical and reasonable for nominal yields to have risen a bit, with clearly the Democrats having the Senate and expectation around more stimulus, and perhaps most importantly, the fact that nominal yields were extraordinarily low, and this is at most points in any of our careers, a kind of a 20 to 25 basis point move up in nominal yields would be neither here nor there. But of course, it's a very big deal when they start out at a level that's below 1%. So my first view is, I don't think things have changed as much as they appear to have done. Now, when it comes to, I think what you're driving at obviously is, what does this mean in terms of what people are calling the reflation trade and what one should do in equity markets? I think they're the most, just like with nominal rates, perhaps the big thing to bear in mind is just how extraordinarily low they are in absolute terms. When it comes to equity markets, we are in a roaring bull market. And I think a lot of this discussion around rotation and shifting between sectors is the kind of thing you normally get when, when prices have risen quite so much, quite so fast. Now, of course, starting in November, not with the election result, but with the first vaccine approval, of course, we saw a massive return to what people are calling value in cyclical areas. But I think they've really gone to areas where they think their fundamentals might actually improve. And that's most obvious, I think, in things like, materials and banks, where, there's a story around commodities, which I think works anyway, and a story around banks, which works if nominal yields continue to rise a little bit. My view is, or our view is, that rates may go a little bit higher from here, but probably not that much more. And the fundamental underpinning behind this, extraordinary set of circumstances in capital markets hasn't changed perhaps quite as much as it looks.
So help our audience understand what that means in terms of the trade. What stocks or companies have you added and what have you sold?
Well, what we've done is we have reduced, for example, some of the longer duration businesses such as consumer staples. So because the ones that we have, we're stock pickers, so obviously we love everything we own. I mean, you can't expect me to pretend to be impartial, as a fundamental stock picking equity investor. But so clearly we think the consumer staples we hold, things like Unilever, Mondelez, Colgate, are excellent quality businesses, and PepsiCo I should throw in there. But we've reduced their weightings in the portfolio. We've also reduced some of the weightings in some of the larger US tech companies, and for that matter, in the some of the Chinese e-commerce companies. And we have increased weightings in areas like materials. We're a long-standing great enthusiast for Nutrien, the agri giant of Canada. We've added BHP, something which I'm sure your viewers are all familiar with, something that we've known obviously for a very long time. And we've also added actually a smaller mining company, Lundin Mining. Plus in the US funds, we have a big position in Citigroup, which has done very well for us, though it's not a particularly new purchase. And then in a different area altogether, of course, in the semi space, and you've been talking on the show about what's been happening in South Korea and Hyundai. But Samsung is a reasonable position for us. And while they don't break down which parts of their business deliver those fantastic numbers until sometime next week, I think it's fairly safe to assume it's the DRAM memory business which has really driven it. But you see, the way I don't see these things as a reflation trade, and I don't see them all as being the same. I mean, there's a story behind materials and commodities. I think potentially a very exciting story, which really is linked to fundamentals. What's happening with financials is just the combination of bull market chasing, great expectations and hopes around higher rates, which may or may not materialize, and of course the fact they were on sensationally low multiples coming into it, and good things can happen to cheap stocks. And then again, the semis is a story of its own. So the way that we look at it, unsurprisingly, I suppose, given our fundamental approach, is this is really about looking for companies whose fundamentals are improving and where you can find those at decent prices. And that's our job all the time.
Ali.
But they're the kind of changes that we've made over the course of the last 3 months or so.